Good morning and welcome to our webinar on client risk in association with Deloitte. CPD has been applied for and confirmation of CPD will be sent to attendees who stay online for the full duration of the webinar in the coming weeks. As we're aware, climate risk is an important issue that impacts our industry as well as the broader economy, but we know it is a new and complex area for our members to get to grips with. So last September, the Central Bank of Ireland issued a Dear CEO letter to all regulated financial services providers, which included brokers, and it outlined their expectations in relation to climate, social and governance issues. Following the issue of this letter, Brokers Ireland met with the Central Bank. We were keen to discuss what those expectations meant for brokers, both insurance and financial, and how proportionality could be applied given the nature and scale of the majority of our member firms. The recent changes to the Insurance Distribution Directive IDD came into place on the 2nd of August, and they require members who are advising on investments or insurance-based investment products to gather the sustainability preferences. I suppose is just another requirement that our members have to adjust to. We understand that this is challenging. It'll require more of your time, more paperwork to be completed, and combine that with the fact that there are limited applicable products on the market at present. Given the central bank letter, the changes to the IDD and the upcoming level 2 measures of the SFDR, Brokers Ireland wanted to provide as practical a guidance as possible for our members. So we worked with Deloitte in drafting the recently launched climate risk guide for our members. The guide and accompanying templates are available in the compliance support section of the Brokers Ireland website. And we'd urge members to review this guide after today's webinar if you have not already done so. And if you need logins to access our website, you can contact us as well. So today, the webinar will be divided into 2 sections. Firstly, we're delighted to be joined by Mark Abu, Director of Sustainable Finance, and Grania Temple, Manager of Sustainable Finance from Deloitte, with whom Brokers Ireland worked with to compile the climate risk guide. Mark and Grania will provide an overview of the guide, what is climate risk and its likely impact for brokers, along with the recent changes to the Insurance Distribution Directive, meeting central bank expectations and the upcoming SFDR level 2 requirements which come into force on the 1st of January. In the second part of the webinar, we will then hear from one of our financial broker members, Donal Milmo-Penny, who will give an overview of his experience of dealing with clients and adapting his processes to the new IDD requirements. At the end of the session, we will answer some frequently asked questions we've received from members. If you have any additional queries, feel free to pop them in the question box, and we will revert to you by email following the webinar. So without further ado, I will pass you over to Mark.
Brilliant, and thank you, Elizabeth. And on behalf of Deloitte, it was great to work with you, Rachel, Kathy, and the rest of Brokers Ireland on this guide over the last few months, and thank you for inviting us to do this webinar as well for your members. So as Elizabeth mentioned, my name is Mark Aboud and I'm a director in Deloitte with a specific focus on sustainable finance. And what I'm going to talk through over the next couple of slides is the climate risk landscape and specifically where brokers fit into that landscape. Then I'll focus in on the specific risks, but also the opportunities that pertain to brokers as a result of climate change. As Elizabeth mentioned, further detail is outlined within the guide we developed with Brokers Ireland. But if you do have any questions, more than happy to take them away, please put them in the chat. So moving on to the next slide, please, and looking at where brokers sit within the climate risk landscape. So looking at the left-hand side of the diagram on this slide, brokers are in a unique position as they sit as the intermediary between product manufacturers such as insurers and asset managers but also from a downstream perspective, clients themselves. And although similar, the climate risks and implications for each of these stakeholders do vary, and it's important for brokers to be cognizant of that. From an insurer and an asset manager perspective, physical risks are the first order risks, such as we all know, weather-related events such as floods and storms, and how these impact operations of an organization. Transition risks are the financial risks which could arise for clients from a transition to a lower carbon economy. So changes in consumer behavior and demand, and we can see that under the client piece in terms of their own preferences. And then finally, liability risks, which are probably most relevant for the insurance industry. These are the risks that could arise from parties who have suffered loss or damage from climate change. So climate change litigation is an example here. I'll go into more detail on risks specific to brokers in a couple of minutes. But maybe to conclude on this slide, from a regulatory perspective on the right-hand side, there's been over 400 risk and regulatory changes in financial services since 2015. There's what we call an alphabet soup of standards, frameworks, and acronyms out there. And we're starting to see a lot of variations between jurisdictions. So the EU are going ahead with their EU sustainable finance strategy. We have the local regulator with their own agenda as well, which we'll talk about. The UK in a post-Brexit scenario with their own initiatives. And then the Biden administration making announcements recently in terms of climate change. So if you're a global organization, this will affect you in a different way. So there's a lot of unknowns and things are under development, but they're really accelerating, and you're probably feeling that today in your own organization. So just moving on to the next slide, and this will help with the why. I don't plan on spending too much time on this particular slide, as I think the summer we've had globally has probably crystallized the reality of what's happening to our climate. It also helps us understand the why, as I said, for all of this regulation and the impact that financial services can have. So according to the Intergovernmental Panel on Climate Change, the IPCC, there is scientific consensus that warming of the climate is unequivocal, and that human activities, particularly greenhouse gas emissions, are extremely likely to have been the dominant cause for the observed warming since the mid-20th century. So the key objectives of all of this regulation and the role the financial services sector can play to combat climate change are to, firstly, redistribute capital flows towards more sustainable activity, so out of hard to abate sectors into more greener or sustainable sectors or industries. Secondly, to embed sustainability into risk management and capital allocation. So we're seeing that happen quite aggressively in the banking sector, for instance. And then thirdly, to foster greater disclosure and transparency, so reporting requirements, and something that Grania will touch on in a couple of minutes in the regulatory slides. So just moving on to the next slide, brokers have to consider changing their business models to take account of the risks and opportunities posed by climate change and the global transition to reducing carbon emissions, but at the same time responding to reputational and regulatory risks. Brokers are exposed to financial risks from climate change in a number of ways, and I think understanding the extent of the exposure and the level of potential future regulatory scrutiny will be key. So maybe taking a look at each of these points on this slide in turn. So from a transition risk perspective, as the main conduit through which businesses buy financial products, brokers are potentially materially affected by the transition risk in particular. The risks for which their clients will seek certain products will change over time as their risk profiles and needs change as well. So some insurance coverages, as an example, may simply become obsolete, and while some new risks will require new products. In this context, brokers face both risks and opportunities, which we'll talk a bit about as well. While some current business models may be over-reliant on carbon-intensive industries as clients, they may also find new clients as the carbon transition continues. From a product risk perspective, products themselves could also be affected by physical, transition or liability risks related to climate change. Climate change could affect the price of insurance. For example, in an extreme scenario, certain commercial properties may become uninsurable due to the increased underlying physical risks, and therefore impossible to rent or buy. If these scenarios become widespread and lead to a shrinking addressable market, brokers' bottom lines could be affected. So brokers need to work with product manufacturers to understand what they're doing to adapt their products to the changing climate and how this will affect their clients. Another example is the interpretation of the scope of existing insurance coverages that may change as a result of climate change. For example, liability type policies that were not originally designed to include climate-related risks may be seen to cover climate risks in the absence of an explicit exclusion clauses. So brokers need to work with clients to understand any changes in risk profile, assess the coverage of current insurance policies, and identify products to transfer new risks where necessary. From a reputational risk perspective, and picking another example from the insurance sector, insurers are announcing plans to stop providing insurance to certain non-sustainable sectors and activities. So as the intermediary between insurance companies and their clients, brokers need to adapt and form new relationships to sustain revenue streams while also protecting their own reputations with their clients. And finally, it's not all about the risk. There are significant opportunities for brokers. As an example, you could also advise clients on how to diversify to be more sustainable, which will open avenues for new products and services. Innovation and developing new products and services may improve your competitive position and allow you to capitalize on shifting demand. From a market perspective, proactively seeking opportunities in new markets and for example, diversifying through new assets. And lastly, resilience. So organizations which improve their resilience to physical climate risk are likely to benefit from reduced business interruption and lower operating costs, outweighing the cost of investment and adaptation measures. So that's just a whistle-stop tour of climate risk and how brokers sit within that landscape. At this point, I'm going to hand you over to my colleague Grania, who's going to talk a bit more through the regulatory landscape and how it's relevant to brokers. So Grania, over to you.
Thanks very much, Mark. And thanks, Elizabeth, for the introduction as well. So as mentioned, my name is Grania Temple. I'm a Sustainable Finance Manager here at Deloitte in the Dublin office. And I'm going to run through some of the regulatory landscape that brokers need to take into account and that they will be affected by in the coming months, but are also currently exposed to. So what we're going to look at is SFDR and the timeline associated with the SFDR regulations, and also the changes to the IDD and the sustainable factors incorporated within that. So if we could go to the next slide, please. So first off, we have the SFDR, so Sustainable Financial Disclosure Regulation. And this is literally as it says on the tin, it's a disclosures regulation. So it classifies various investment funds and investment products that brokers will be working with their clients with. The classifications within SFDR go through Articles 6, 8, and 9. So these are articles that classify the varying amounts of sustainable activities within the investment funds. So Article 6, investment funds are investment funds that do not promote ESG or sustainable activities. Article 8 classifies investment funds which promote environmental or social activities. And then the dark green of Article 9 is investment funds which have sustainable investments as their objective. So it really ranges between the typically called grey, Article 6, where there are no sustainable activities taken into account, to those in Article 8 that promote, and Article 9 that actually have their sole objective to be sustainable activities. So out of those three classifications, we also have three areas of focus where financial market participants are actually exposed to. So they are the financial market participants, the financial products, and the non-EU managers. So in terms of the clients that brokers will be working with, these are the three pillars that you'll need to take care of when you're speaking to your clients. So within the financial market participants that are exposed to SFDR, we have insurers, firms providing portfolio management services, and that includes credit institutions. Then we have our pension providers, our AIFMs, and UCITS management companies. Then within those, the products, the financial products that brokers need to be aware of being exposed to SFDR are the AIFs, the UCITS, insurance-based investment products, pension products, and then the pan-European pension products. So in those two segmentations, so the financial market participants and the financial products, even if these are held by non-EU managers, there's still potential that you will need to take SFDR into account for those non-EU managers. So if the non-EU managers are managing EU financial management products, or if they have a fund that is held within an EU state. So then looking into the timeline of the SFDR level 1 and level 2 applications and reportings, we already have the application for level 1 and then also the reporting for the principle-based disclosures under level 1, and also for the reporting of the taxonomy for articles 5 and 6 within the EU taxonomy. So that's what's already available for brokers to work with, and we'll get to in a second why they would work with that information. And then in the future, brokers will have an additional amount of information available to them in January 2023, and then in June 2023, the second level of SFDR comes into scope, and January is the application of the ESG disclosures, so the level 2, and then June of next year is the publishing of the first statement of principal adverse impacts, which will be data that brokers can use for the input of their the changes that happen to IDD, so how they cover off on those, which we'll go to in the next slide. Thank you. So there's recently been updates and amendments to IDD, the Insurance Distribution Directive, and these have incorporated sustainability factors, more precisely the sustainability factors risk and preferences of various different clients and the clients that brokers will be working with. So first of all, I guess it's important to make sure we know what sustainability preferences mean. So the customer or potential customer has sustainability preferences when he or she chooses that at least to some extent, one or more of the listed types of IBIPs should be integrated into his or her investment. So we go through within our guide the various types of listed IBIPs, but it's the same type of approach as SFDR, where there is sustainability promoted, or that sustainability is actually the objective of these listed types of IBIPs, and then they would adhere to the sustainability preferences of those clients. So I guess one of the main questions from the broker's perspective is how do they actually integrate the changes to IDD, and what do the guidelines cover? So we have some questions that brokers would be very interested in hearing the answer to, and they're answered within the guidelines. So that would be how to help customers to understand the concept of their sustainability preferences and the investment choice to be made within that context. Then also how and when to collect the information from the clients or customers, how to match the customer preferences with products based on the SFDR disclosures, and the information that comes out of those disclosures. It also covers off the necessary arrangements and compliance with the record-keeping requirements for the delegated regulations. And then most importantly, it emphasises that all insurance brokers and insurance distributors providing advice on IBIPs should have basic knowledge and competencies to know how to assess the customer's sustainability preferences. And then, of course, that the sustainability preferences, if you are working closely with sustainable products, it is emphasised that you should have even more in-depth knowledge on those subjects. So if we could go to the next slide, please. Thank you. So the changes and the modifications to IDD can be categorised into the 4 subsections that's shown on this slide. They are the product oversight and governance arrangements, the conflicts of interest, the product suitability assessment, and greenwashing, or the avoidance of greenwashing. So for product oversight and governance arrangements, we want, from the changes, the modifications that happened to IDD, we need manufacturers of insurance products and brokers to consider sustainability factors of the product approval and product testing processes for each insurance product which is intended to be distributed to clients seeking insurance products with a sustainability related profile, as well as the target market identification process and the distribution channels. Additionally, sustainability related objectives will need to be factored into the distribution arrangements. Then for the conflict of interest modifications, brokers of IBIPs will be required to integrate sustainability factors into their processes for identifying those conflicts of interest, which may damage the interests of clients or the potential client. For example, where clients' sustainability preferences are in conflict with the investment returns generated within the IBIP. So with the product suitability assessment, brokers recommending various different IBIPs are required to obtain information about the client to determine the client's suitability for a particular product. And this includes assessing the client's preferences for risk taking and risk tolerance. And then those recommendations make it clear that the financial preferences of the client need to be taken first and foremost, and secondarily the sustainability preferences of the client. So then with the greenwashing modification, in order to prevent greenwashing and mis-selling of products, brokers and insurance undertakings should recommend IBIPs as meeting individual sustainability preferences. Where those products don't meet those preferences, they should not be recommended. And they should also explain to clients or potential clients the reason for not doing so and keep a record of those reasons why they would not recommend the products that are greenwashed. If we can go to the next slide, please. Thank you. So in speaking about SFDR and IDD, it's important to recognise that they're 2 distinct regulations. They do, however, feed into each other in terms of the output of SFDR can be used as the input for covering off the modifications of IDD, and that is what we see in this timeline here. It's the use or the available data that can be used by brokers that is actually published within the financial system already. So from the 2nd of August until the 1st of January, the brokers will be restricted with the information that they have available to them because of only level 1 of SFDR actually being published and disclosed at the moment. So at the moment we have available to us the pre-contractual disclosures. and the website disclosures under SFDR within level 1 of SFDR. But then when we come around to the application of level 2 for SFDR, brokers will then be able to take into account the additional information that is published for the products that they will be discussing the sustainability preferences of their clients with. So once that happens, the brokers will have available the standardized pre-contractual disclosures, and then also the SFDR website disclosures, which will incorporate the PAIs, the principal adverse impacts, as well. So that can add a lot of colour and a lot of understanding to how brokers and how clients can actually see various different products and understand the sustainability preferences and how they link up to the products that are available. So if we could please go to the next slide. So it's very nice to hear from the EU perspective the amount of work that's being put into place and the kickoff for various different regulations like SFDR and the amendments to IDD, but also there's a lot of pressure coming from the local market, from the Central Bank of Ireland, who previously wrote a Dear CEO letter covering off the 5 various topics that they require from various financial service participants. So first off, we have the emphasis of governance, and within the letter they require participants to demonstrate clear ownership of their boards of climate risks and how it's affecting the firm. They also have mentioned risk management and the need to understand the impact of climate change and the risk profile of the firm in relation to climate change risks. For scenario analysis and stress testing are required to assess the impact of potential future climate outcomes, including impacts on capital adequacy where they're applicable. They also touch upon the strategy and business model risk. So undertaking business model analysis is required from the Dear CEO letter to determine the impact of climate risks and, of course, the opportunities that firms may be able to have within those scenarios. Finally, the CBI has emphasised the importance of transparent disclosure to customers and investors regarding the regulated firms' processes around climate risks and ESG issues. So we see in the full circle, it is not just the EU regulators that are really emphasising the need to incorporate sustainability and sustainability factors, but it's also within the local market as well. So with that, I'm going to hand over to my colleague Mark, who's going to wrap up with the key points.
Thank you, Gráinne. And maybe just moving on to the next slide there, please. And I'm going to go through this quite quickly. It is a very heavy and complex topic, and we thought it would be useful to maybe just wrap up with 3 key takeaways from the last couple of minutes. The first one is that brokers are exposed to financial risks from climate change, emphasised through transition, product and reputational risks. However, not forgetting that there are opportunities here, and we're definitely seeing in other industries a first mover advantage in that regard. So I think something to be cognizant of. Secondly, and I think Gráinne gave a great overview, that there's key regulatory issues or concerns, considerations for brokers, and the 2 or 3 key ones are the SFDR level 2 reporting requirements that will come into play over the next couple of months, the IDD, which is new as of the 2nd of August, the IDD amendments to sustainability suitability assessments, and then the Central Bank of Ireland has issued guidance in relation through a Dear CEO letter. It must be noted as well that the CBI have also issued a consultation paper for climate risk in the insurance industry, and it was something that was delivered after we compiled the report. So again, another item to look out for. And then finally, I suppose, like, brokers come in all shapes and sizes, and I think the issues raised and the requirements on brokers will vary depending on your own size, business model, complexity, the types of clients that you have. And we thought it would be useful, and I think in that regard, to have a broker actually from the coalface to give their own perspective on how they're dealing with this, because it is quite a complex topic. So I'm going to hand over to Donal Milmo Penny, who's going to give a perspective from a broker perspective. Over to you, Donal.
Thanks, Mark. Yeah, I definitely can't disagree with you that this is a complex area. My name is Donal Milmo Penny. I'm a financial broker. We've a firm with 3 client-facing advisors. We're based in Dublin. Firstly, if I can thank Brokers Ireland for commissioning this guide, and for Deloitte and their excellent work in putting it together. I think this is the kind of thing, certainly for me, this is the kind of thing that my business couldn't do on its own. So it shows the value of being a member of Brokers Ireland to me. As a broker, I don't necessarily welcome new regulation in that, you know, it's a very large part of my life and my workload day to day. But look, this is the reality going forward, right? Whatever you want to call it, green, sustainable, ESG. These are all things that are part of our future, and we have to deal with. So I think over the last number of years, probably a lot of us, myself included, would have been to varying seminars, conferences, seen varying presentations where people, product providers, maybe an interesting speaker brought in from the outside is talking about where this whole area is going. And at the same time, perhaps certainly I have, and I'm sure many other brokers have as well. I've met clients who said, look, I'm concerned about this. I'm interested in sustainability. I'm interested in having green investments in my portfolio, whether it's pension or an investment. And over the last while, it's been challenging to find a solution. There are a number of solutions in the market provided by a number of the life offices or other providers. But it's been quite a narrow space. And I think it's been something that's been trying to find its way into the mainstream. So I think probably now is an interesting confluence of a kind of push by regulators and a pull from consumers. And we're now where we are, but it's obviously a change when there's regulatory change, in that there's change for our businesses, and we have to change how we operate. We have to change how we do things. And that's a challenge in its own right. So having a guide like this is fantastic to kind of show us the roadmap, show us what's necessary, show us the things that need to be done. I suppose some of the things that have been interesting from a client perspective as well, maybe, is if they're talking about, okay, well, what's the and this doesn't maybe touch directly on what we've spoken about in the webinar today, but is there an impact on investment performance from taking a sustainable or a green perspective? Some early indications would seem to be that, in fact, there can be a positive side to this. Now, some might argue that could be from fund flows, or how, I think Mark alluded to it earlier, how capital is allocated, and certainly these regulations will change how capital is allocated. So does that bring us back to a kind of economic supply and demand type situation? If you're seeing better returns from this type of investment now, is it because of is it an anomaly based on fund flows in the short term, or is there something in this long term? If a company has an interest in being more sustainable, well, perhaps they've better governance, and if they've better governance, are they better run? And if they're better run, perhaps longer term, can they provide better returns? So I think there's a lot of kind of moving parts in this that will play out over time. If I can get away from kind of broad brush strokes and thinking about things, bigger picture things like that, there's a lot of practical stuff here as well. in that, you know, in the implementation and the operation of our businesses, there's changes required. Some in the past, some that have been quite immediate, and some coming up in the future. I suppose just to maybe touch on a few dates, if we hop back to March of this year, the SFDR, we were all required to put varying information on our terms of business and on our websites and such like. So that's in the past. If you haven't done that already, do it. You know, the details are there in the guide, and there's support available from Brokers Ireland just to make sure that you are where you should be at this stage as a broker. Certainly, I think that just makes plain and simple sense. Getting further up to date, 2nd of August, we all came under an obligation to change our business process, and that really comes down to fact finding and, you know, how we advise. As you know, in practical terms, that's probably been one of the more challenging things, and it's something we tried to bring into the conversation maybe over the last 6 months or so with clients, of saying, okay, what are your preferences in this area? I think what's interesting in that regard is part of our job as brokers and advisors generally is somewhat that of a coach. And what's different in this scenario is we're not coaching our clients. You've got to look to elicit their preference, and if they have a preference for sustainability, and again, I think some of the other participants here have covered this in better detail than I can or will. But if someone shows a preference for sustainability, that instantly narrows the range of fund choice of what we can put behind a recommendation. When we implement a recommendation, there's generally product involved, and if someone has a sustainable preference, well, then that narrows the universe from the broad array of funds mostly that we deal with to a much narrower array. I suppose the product providers and life officers have caught up in this space to a large extent lately, with a lot of product now seeming to meet what seems to be referred to as Article 9. Again, please, I'll stand corrected if I'm wrong in my terminology, but sorry, Article 8 being light green. So there is quite an array of product there, but generally the client who'd been really seriously concerned about this was probably more your Article 9 guy who wanted your dark green, your much more engaged solution. I think that's a space that's going to play out over time as the providers catch up and develop broader and better solutions in this space, and perhaps also in the lighter green, if you want, space. A lot more of the mainstream product, where that might be managed portfolios or something like that, they'll probably start to meet that criteria. That's interesting in its own right, in that it coming back to how capital is allocated, it's changing that in the background. So, fundamentally, if you believe that the future will be better if we behave in a more sustainable or a greener manner, which I think is basically, irrefutable that we should be, perhaps that's a good thing. So perhaps that's to be welcomed, despite the immediate change, which is difficult, difficult to deal with. I suppose going on with the practical side of stuff there, sometimes trying to match what you might want to do for a client with a narrower range of choice in the background can be a challenge. So again, I stand to be corrected by the superior technical people on this call, but in practical terms, the simple way that I look at this is that if a guy understands that he has demonstrated a sustainable preference, he can, or she can change, can indicate a choice to change that preference. And if they do, then you can bring them back into the world of looking at the full array of everything that we normally would look at. I think it's just maybe understanding the detail of that. And again, there's information in this new guide around that is important. Quite often our job ends up with an amount of nuance involved. And I think being able to work into that is something we'll all become more comfortable with over time. This will just become a standard piece of our advice process, and we'll manage to handle it with the same aplomb that we handle, everything else that we do on a day-to-day basis. I suppose if I could maybe try and kind of look at the present a bit more and gaze forward, at the moment, I think you'd have to describe where we are as a little bit clunky. We're trying to work our way around things. We're trying to discover solutions for clients, whilst at the same trying to upskill ourselves, make sure our businesses are compliant. We've done all the right things, with regards to our business process, with regards to fact finding, with regards to having notices in terms of business and statement suitability, and all this kind of practical stuff that we have to do. But over time that'll normalize, that'll embed into the business. There's a little bit of catching up to be done in the market. For this stuff to be standardized in our own fact finds, but a lot of us nowadays will use fact finds provided by our technology providers. So I know some are more advanced than others in having all of this stuff embedded into what they provide us with. It's natural and it's necessary that everyone is up to speed on that, and that's embedded across the market. I can't see any reason why that wouldn't happen. I think obviously over time as well, the insurers, the range of what they offer us is going to broaden, it's going to improve, and that might not just be on the light green side, but on the Article 9 side of stuff, where maybe there's a stronger demand. Maybe there's a place for that space to increase also. So yeah, look, I think time will bring that kind of change. To maybe get back to kind of looking at it at a higher level way, this can only really, despite the inconvenience and despite the increased burden of regulation and all the stuff that makes our business a challenging one to be in. So I suppose just to conclude, this can only really be a positive thing for the future. I don't think no one can really deny the science, right? And as brokers and as part of the investment community, it's inevitable that the world is going this way and we have to travel with that. Change is inevitable. In our business, we're probably more used to and can I say better at adapting to change than most. And yeah, whilst implementing that change can be challenging, I think looking forward, this is a positive development, and I for one am very thankful to have this guide, this material to assist with that, the support of Brokers Ireland to assist with that. And look, this is also an evolving space over the next number of months. Coming into the start of next year, there will be further change, and we need to work with that. I'll be relying on Guidance Brokers Ireland in doing that, as I'm sure many of you also will be. And on that thought, I'll pass you back to Elizabeth.
Thanks, Donal, for that. I think it's really good to get a broker's perspective on, I suppose, adapting to these new challenges. As you said, there is a lot of regulatory change, and I'm sure many of our members who are attending the webinar feel the same. Also, thanks to Mark and Grania for your very informative presentation. I think it gives a good overview of the guide, so hopefully will assist you when you're reviewing the guide. And I think it's important that not only is the guide, but there's templates there. So for how to, for example, meet the central bank expectations, and you can fill that in kind of on a proportionate basis based on your firm. So obviously, if you're a sole trader, there'll be certain sections that won't be applicable to you, whether if you have a larger company. We also have the additional document for capturing the customer's sustainability preferences, which you can use as kind of an addendum to your fact find. And then finally, there is wording there for the SFDR level 2 disclosures, but those changes don't need to be made till towards the end of the year. But just to make you aware that all them are on the compliance section of our website. So we have received a lot of queries over the past few weeks on the changes. So I think it might be good to kind of go through some of those questions now with Mark and Grania. So if Mark, if that suits, I'll start with you. So I suppose one query we had is for the central bank expectations document, should brokers focus on the risks to themselves or to their clients?
I think it's a good question, and I think the CBI letter this note was directed to financial market participants. So that includes both insurance and financial brokers, and maybe firstly clarify that point. So it is intended that it applies to both, and the risks that apply to those organizations or those individuals. Having said that, at the same time, I think the risks to your clients could potentially have a risk to brokers themselves. So I think it's important to be cognizant of that and how those knock-on effects may manifest. So as an example, where a client's property is located, how you assess the risk, your own client portfolio, the risks of that portfolio. So I think things like that are a consideration. So it's a bit of both, but it is intended to be guidance to the organization itself.
Okay, that's perfect. Another question we received is under the SFDR, the broker in question opted not to consider the adverse impacts of investment decisions on sustainability, and they have the relevant, I suppose, disclosures on their terms of business and on their website. And they are just wondering, do they still have to assess the customer's sustainability preferences under these changes in the IDD?
I'll take this one. So I guess the main thing to note here is that SFDR and IDD are completely distinct from each other. So the requirement under IDD is to assess the sustainability preferences of the client that you're working with, regardless of the broker. So the broker's choice within SFDR can be to opt out of the sustainable preferences, to disclose for those. But then within IDD, they're going to be quite useful to actually take them into account. It's completely the broker's choice, but it's going to make IDD compliance quite difficult if they don't take them into account.
Okay, perfect. And I suppose what changes are coming into place on the 1st of January in respect of brokers?
Maybe I'll take this one, and really simply, I think the main one is the SFDR level 2 that Gráinne outlined. And as you mentioned, Elizabeth, as well, there is some template guidance in the guide as well. So I think for this particular question, I think referring to the guide and any other requirements from that timeline that Gráinne outlined will be within the guide.
And just in relation to, obviously you're going through the gathering of the information in relation to sustainability preferences, and it comes to maybe aligning that with a product recommendation, and there is no product that kind of meets their preferences. And I know the guidance is that, like obviously the broker has to remain neutral in their opinion, but the customer can adapt their preferences. What happens if the customer doesn't want to adapt their preferences?
Very good question. So I guess the way to think about it is from the offset, you as the broker need to have an audit trail to comply with IDD to make sure that it's known, you have the trail that you did actually assess the sustainability preferences. Now, in the case where there are no sustainability preferences, or actually if the products don't link up with those sustainability preferences, you need to reassess. If the client doesn't want to reassess, then you actually can't provide a product for them. Within IDD, it's a misleading, it's a greenwashing issue if you then recommend something that isn't within their preferences.
Okay, so I suppose, as you said, from an audit point of view, the important thing is that perhaps you capture that, obviously, in filling out the template, and then the statement of suitability, if there is one, that did you make reference that there is no, suitable product to match their preferences. Okay, perfect. I might ask my colleague Rachel to come in on the next couple of questions, because I know she has been liaising with some of the life offices. So Rachel, basically, are any of the life offices offering support in relation to this issue?
Okay, so yeah, we have received updates from a number of life officers who are active in this area. So what they seem to be doing is updating the tools that brokers use for assessing suitability and risk rating clients to assist in meeting these requirements. So, for example, their risk rating tools and their portfolio building tools, they've incorporated the additional questions that brokers now must ask under the IDD requirements. So that will assist them then in choosing or selecting maybe products that will be more suitable for those clients. A lot of them have updated their broker portals or sections of their website with information about sustainability, either for clients or for the brokers themselves. They've also, a lot of them have produced questionnaires and they've given SFDR ratings to their funds and made those available to brokers so that they can see what SFDR rating each of their funds are. Some of them have already provided webinars, and I know others are intending to do so over the coming months. And as Grania mentioned about competency and knowledge for brokers, it's really important, obviously, that brokers attend webinars where possible on this issue so that they make sure that they're up to date with all of these changes.
Okay, perfect. And I suppose one of the kind of key issues from our members' point of view is, you know, obviously you go through the preferences and there's not a lot of products that are available on the market, and they tend to be, particularly if they're, you know, the limited number of Article 9 products, they are very high risk. Do you know if the life offices are developing new products?
Yeah, so I suppose a lot of them offer the Article 8 products or have given that status to a number of their funds. There's 3 companies, I think, who offer Article 9 funds, but they're quite limited. There's not a huge amount of those. I know with the second level SFDR regulations coming into effect in January, that a number of the providers, they're going to be exploring their fund options and ranges in this area, with a hope to expanding the range of funds that they have available that they can classify as Article 8 and Article 9 funds. So I know there is, I suppose this is very new for everyone, and there are plans, I suppose, to increase the fund options for customers out there who are interested in investing in these products.
Okay, that's perfect. You know, I suppose, as Grania mentioned, in relation to the level 2 measures, they will be most helpful when they come in, and it'll, you know, really assist our members. So we're kind of at a challenging point at present, but hopefully, as we go into the new year, things will be a little bit easier in relation to, you know, categorizing products, etc. As I mentioned, if anyone has any queries, you know, following the presentation, you can send them to ourselves at compliance@brokersireland.ie, or you can call us on 01661 3067, and we will go through those queries and revert to yourselves. Again, I wanted to thank Mark and Grania for a really excellent presentation and for all your assistance with the guide, and we know that our members will find it useful. And Donal, again, it was really good to get a broker's perspective and kind of the challenges and also opportunities that there might be in this area for them when they're dealing with their clients. So thanks again, and thank you.